Good morning, traders. It's Wednesday, December the 18th. Taking a look at the charts, we've got the SP 500. We've got the 30-minute chart here, just regular trading hours on the left with our trend analysis, meaning green bars mean we're in an uptrend. Lime green areas mean the market's oversold. Orange usually is a trend change. It goes from orange, eventually goes to red. This is where we got into a net short position, and then we had some news that bucked the trend, and then we can see went back to an uptrend, and we broke to new highs, which triggered the new leg to the upside. Now, if we look over at the daily chart over here, and we look down at this short-term indicator at the bottom, this is our cycle analysis, more or less right here is where the market was on the verge of breaking down. This is where we got into a short position looking for a breakdown. Typically, this is where we see the corrections take place in the market, which is right through here. When the market sells off, that's what we are looking for. We had another one over here as well. Obviously, news bucked the trend, and we are back off to the races with potential, well, we are in a holiday rally here. See how far it goes. If we look at the cycle here, this intermediate cycle, the pink line at the down here, more or less they're making higher highs, and the market, the cycle is getting squeezed to the upside. We're in this phase where again there's no fear in the market. This correction that we saw right over here was just enough to cleanse the market. We did see the VIX spike. We saw the put-call ratio spike. That tells us we also saw the NYSE volume on the sell side spike as well to levels that signal the average investor was panicking out of trades. And when the average investor panics out out of the market, we can see it reset and continue to move higher. So that was enough. We were hoping for another leg down, a nice ABC correction. Never got it. Instead, the market popped and is continuing to hold up above the 5-day moving average. Now, if we look over here on the 30-minute chart, this blue line going across here is the 5-day moving average. And if we look at this red hashtag here, this red hashtag indicates the market's overbought. And as the market trades, so 2 days ago, the red hashtag was here telling us we were overbought. I mentioned this yesterday, saying the market's likely to pause or pull back to digest the move. And it only takes a day for the market to do that. And then the next overbought territory you can see is higher today. And it gives the market room to continue to run. The market typically can only move so far, so fast before it needs to correct. And it hits this level, it's been consolidating. And we're continuing to march up the 5-day moving average. If you look at the daily chart, the light blue line on here is the 5-day. You can see how it can get into this strong run where it just stays above the 5-day moving average. We had it over here as well, where it held above the 5-day. Huge run here above the 5-day. Then it started to chop around and show signs of a top, but we're back above this 5-day and trucking our way higher. There will be, again, a big correction at some point, but at this point, it has reversed to the upside, continues to go higher, and money is flowing into equities. Now, if we take a look over at the chart of bonds, using the same analysis, more or less we are back into red bars here. More or less it's tagging the 200-day moving average from about a week ago. It had a bounce off that level, but overall the trend is down. We did start to see it reverse here with some orange bars, and we were long bonds, and the market chopped around it. Obviously, we had some strong economic data, which sent everybody running back into the stock market, and money has been more or less flowing out of the safe havens, out of bonds to the downside. So overall, bonds are out of favor at this point. Now, if we take a look over at precious metals, seen as a safe haven as well, you can see here we've kind of gone from red bars into a potential uptrend. Now, we've talked about this many times. We are still testing resistance here. We haven't broken 2 previous pivot highs. The next high is over here. We need to see the market consolidate and start to show some more strength. But overall, we are still in this bear market where it sells off, rallies, sells off, rallies, and we are still stair-stepping our way lower. And it is trying to build a base here and pop to the upside. It hasn't yet. Short-term early indicators are starting to say there's some momentum to the upside, but we saw these green bars start to happen at both of these levels here, where the market tries to flip to the upside and then it gets followed by some big selling simply because it couldn't break 2 previous pivot highs. There wasn't enough momentum either time to break even one previous high. You could argue we might have broke one here, very short-term intraday spike. Again, I think that was on a news-based day, so I wouldn't really count it. We need to break this level. Technically, we need to break this next pivot high level as well for the market to fully reverse from a downtrend to an uptrend, and then we got the breakout and the run to the upside. And how this works here is going to be similar for bonds, similar for silver and miners. If we look over at the miners, they are showing a little more signs of life in terms of they've rallied to the upside. They have broken this previous high, so they are leading the way in terms of this bottom starting to round and turn its way up. Miners are down again today, continuing to consolidate, but they're primed and ready for fear to hit the market and for them to take off, but not quite yet. But you can see from our trend here, we've been flipping and flopping between orange, red, orange, green. So we are starting to hold up and to the upside, and miners are looking again ready, but again we're seeing money flow into the risk on assets, the regular equities at this point still. Looking over at natural gas, down 1.8% this morning. We shorted this. We moved to the downside for a quick profit. Now it's really showing huge volatility, trying to work a bottom out. Overall, if we were to look on the daily chart, we are down in this lower cycle level in the market here. All of these times is when the market put in a bottoming formation, and more or less this is where the market is trying to carve out a bottom and put something in place here. So I wouldn't be surprised if we see it come back down, potentially halfway here, or potentially all the way down to a double bottom, and then maybe start to see it build a base. But overall, we're looking for, this is the first half of what feels like a bottoming formation, but we need the second half to start to build out this half over here, this half over here. That's where we are now in natural gas. Looking at crude, down 0.5% this morning. Yesterday had a nice squeeze up to about $61 per barrel, pulling back this morning a little bit, but overall it's starting to extend and really pick up speed to the upside. This type of kind of breakaway and runaway move, when we get up to this upper level here, we could definitely see some pretty big selling take place. At any point, we're going to see big sellers step in. The 61 is a pretty significant level on the chart. You can see our trend analysis here on the 30-minute chart. We get down to these oversold territories, these lime green. Market rebounds up to resistance, gets oversold, has rebounded, continues to run higher. Yesterday, it's trading above or at the red hashtag, indicating the market is overbought. Today, it is pulled back 0.5% to fill that gap and just to ease off on that overbought market territory. And what happens is when the market moves a certain amount in a certain amount of time, short-term traders pull money off the table and lock in some gains, because usually we see some profit-taking traders come into play there. So that's what happens when the market gets overbought. Same when it gets oversold. It dips into oversold territory, value buyers step in and they buy price up, and it creates momentum, and then the day traders and shorter-term traders pile on for the rebound as well. And we can see that happen over and over again. Natural gas has done it a few times. It went from a downtrend to an uptrend and has had several of these oversold market conditions step into play, but we are getting back into this overbought and looking for a pullback. Anyways, that's it for this morning. We are currently long the SP 500, looking for some new trade setups, hopefully in the miners and natural gas. Look to be the next trade setups going forward, but keep looking for some new setups as the markets unfold, and hopefully have them so they're not all related to each other, meaning that if you get into one trade and it goes sour, it's not directly linked to the other trade, so they all go in the wrong direction on us. It's nice to have some diversification. Natural gas is a good play for that, which is why we like to trade it along with equities. That's it for now. Bye-bye.